Hello guys, I hope you all are doing well. In this video, I want to show you a play that I did in Palantir, and as you know, the Palantir has its earnings coming, and this strategy could play out really good, and I think I'm not gonna lose in this strategy either ways. So all that we're gonna discuss what it is and how you can probably make the same play in the upcoming week as well. So if you are interested in all this, then please do stick around till the end and we are going to discuss all about it. Okay, so this is the strategy kind of I did in Palantir. So the first play, right, that I did, and by the way, this a name of this strategy is poor man covered call, but there is a twist which I'm gonna explain to that strategy. If you are already familiar with what poor man covered call is, then you probably know what these two legs are, but there is a twist, as I said, and that's what I'm gonna explain. So stick till the end of this video. Okay, so if you look at the first leg is a long call. It's also called a leap, right? So this is I opened for Jan 2025 and I did pay 535, right? So I'm already up $65 today, right? So when I saw that I'm already up more than 10%, right? What I did was I did play a second one, which was selling a call. So I did sell a call at 25, right? So I did buy a call at 20, but remember this was a long dated expiry, and then today I did execute a call which is for 510, right, which is after their earnings, right? So that's what I did. I collected a good premium on this, which was I believe this was almost $80, right? $79 I received here. So right now my position overall, right, if you see, I'm overall in $67 profit, right? So now let's discuss quickly the two legs that you need for this strategy. One, as I said, you need a long dated call, right, with a long expiry, which is also called leap, and then in that, against that, you can sell a call. Remember, you don't have to have if you're familiar with covered call, right? This is almost like a covered call, but if you know, covered call requires 100 shares of stock, right? But when you do have a leap option open, you can sell call against that, and that's what is called that's why it's called poor man covered call. I will make a detailed video because there are a lot of scenarios in poor man covered call, so I'm not gonna go in deep into this in this video. So I'll have a separate video for that, but this I just wanted to show a quick play on Palantir that I did, right? So this is what I sold, and now let's discuss the two main cases, right, or the two use cases that can actually happen with the stocks moving in either direction in the coming weeks, right? So the first case, right, let's say the earnings really blows out and Palantir has a very good earning, and what will happen in that case, right? So it could cross $25 easily. In that case, how much I'm gonna make, right? So that we can check here. So if you go to the long call option right here, so let's go to this call option, and what you have to look at is you have to look at the delta here, right? So the delta is $71, right? So right now it's trading around 22, right? So let's say it goes 3 point up, right? 25, so 3, and then you can multiply that by 70, so that's about a $200 profit, right? So that's what the new return you can see here, right? So right now it's 65. If it crosses 25, this is gonna increase to $265 or $270 something, right? And this is the sell call that I did, correct? So I collected a premium here. What will happen if it moves past, right, $25? This could go in negative, but remember there's a IV involved here. So if you look at the current implied volatility, right, this is very high, and that is because of the earnings. So as soon as the earnings are over, and I have chosen the date very carefully here, right, because I've chosen a date past the earnings. So as soon as the earnings are done, even if if it goes up, the IV would go down. That's called the IV crust, right? And because of that, the this is going to go in negative, but it may not go that negative because there is a premium that we see here, right? That has the IV baked into it. So that's gonna reduce from here, which will compensate for your upside potential, right? So overall, this I don't think so that's gonna go too in the negative, but since we're getting profit from our long call, that's gonna offset here, right? Because we have a long call open. So overall, if we close this whole position, right, you will still be in net positive in this case. Okay, so that was the first case that can happen if it blows past the $25. Now the second case, right? Second case, let's say their earnings are good and it really goes down, right? It really goes really down. In that case, you're gonna basically you will profit from completely 100% profit from this call option, right? You will keep this complete $77, and now your leap is free. You can sell another call next week or week after that. You can keep selling call until you kind of recover, and then once you recover, you can close out your long leap if you want to, right? So that's the second case. Now the sweet spot, right? And that is very good position to be. And why I chose 25 is, if you look at here, right? Because the sweet spot for me would be if after the earnings it moves up, but it doesn't cross my short strike, which is the 25, right? So my sweet spot is anywhere between this 20 to 25. That's my sweet spot, right? And if you look at Palantir, right, over this period, especially like last 3 months period, right, that's the kind of range it has been, right? So it's basically, once it moved here, this is the kind of range it has maintained. It has not kind of moved past this 25 range yet, right? And if you look at their all-time highs too, right, the all-time high I believe is let's see, right? So 52-week high, right? It's basically 27, so it has not gone too past 25 yet. Okay, and the whole range is, you can say, between 20 to 25. So that's the main idea of selecting a kind of call option which is 25. And you remember, right, this 25, 30, that those are kind of a main strike price, and you will have a lot of people kind of buying and selling, so they are very liquid in nature, and it's very easy to close or get in or get out of these kind of positions. So that was those are the only things that can happen, right? Either it can go down, I'm gonna profit from here. If it goes up, I'm gonna profit from my long call. So this is a never lose strategy if you do this properly, right? So what I did here was, I opened this call, I waited for it kind of to move 10% or 20% up. Once it is up, you kind of lock in that profit by selling a call, but you sell a call at a point where you are getting additional money as well. So that's the strategy. If you wanna pay it, maybe you can look at the market next week, see how it's doing. You can also open the similar position if you want to. I'm overall kind of bullish in Palantir, but just to cover my downside, this would be my protection. So yeah guys, this was a quick video I wanted to make, and as I said, I'm gonna make a detailed video on this man covered call strategy, because this is a very good strategy if you have a small account and still you wanna do options. That's a very good strategy. So I will make that detailed video soon. So do subscribe guys if you have not done so, and do hit that like button and thumbs up so this spreads to more people. Thank you guys, and I'll talk to you in my next video. Happy investing.